Welcome back. Baby boomers and Gen Xers may want to start saving like a millennial. According to a new report from Merrill, 54% of millennials are cutting back on going out, while over 30% are willing to do things like skip a vacation, delay buying a house, and wait to start a family. All in the idea of saving. Joining me now is the head of consumer banking and Merrill Edge, Aron Levine. Aron, good to have you on the program.
Thanks for having me back, Maria. Good to see you.
So we've been talking about millennials a lot over the last 2 years, that's for sure. They're penny pinching now?
I'm not sure they're penny pinching, but they are actually getting smarter and they're getting more savvy. And one of the things our survey said that's really interesting, 2/3 are realizing they have to be self-reliant, right? So for their future, it's about having their own savings and investing account, not necessarily the government or friends and family, which is what we were seeing a few years ago. So they're realizing they need to be savvy about how much they're investing and saving.
Yeah, and one of the reasons why is because they came out into the economy during the Great Recession, right? So it was a harder time. The economy wasn't doing as well. So they realized they saw a lot of their counterparts that were having problems because they didn't save enough. So I think one of the issues is that they're understanding the government's not going to be there for them. Social Security is going bankrupt. So whatever they're paying in, they can't rely on that. Yeah. And I think that's an important point that's going to happen. But do you see this trend continuing going forward on younger millennials? Or is this just kind of the older millennials that came out in 2007?
Yeah, so it's certainly the older millennials where I think that do-it-myself mentality, right, they've come of age post-recession. I think it'll be interesting to see with the younger who are now coming of age with an economy that's starting to pick up again. The markets are certainly heated up. You've got a whole lot of allure to that, and that's a different mindset than certainly the older ones. But, you know, obviously things change over time. Just like we would have said 5 years ago, that part of the group was also not quite there yet, and they've really, over the last 5 years, sort of, you've seen a shift, certainly in our studies.
We know this is a generation that's mired in student debt, and they're trying to climb out from under that. How much does that affect the way that they invest their money?
Yeah, there's no question that the student debt plays a huge role. I think it plays a big part in this whole delay. Are they living at home longer? Are they not buying their own homes? And that is impacting how they think about savings and investing as well. There's so many priorities. They're trying to compete, right? How do I save for retirement and pay off student debt? How do I potentially take that vacation and pay off? I think more and more they're starting to say, you know what, I won't take the vacation, I won't go out for the avocado toast lunch, and I'm going to start saving some money so I can pay off this debt and kind of go on with my big milestones.
That has broad economic implications for a generation to come, does it not?
It does. I think as you look forward, I think there's some positive those. The idea that they are saving more and they're going to be more self-reliant, I think ultimately is a real boost, because ultimately as they acquire more income, I think they are going to start being able to contribute more from a spending standpoint, but also they're not going to have to rely on other sources for themselves and their retirement.
Which is part of your Merrill Edge survey. Americans are redefining the idea of success. 73% say that success is providing for a family. 40% say donating to charity. 10% say having $1 million. Isn't that interesting? The priorities have changed.
Yeah, I think that's really consistent with what we see with the millennials, right? They are very socially conscious. They want to get involved, and I think that is a good thing for the future, that 40% want to give versus 10% want to be a millionaire. I think there is some positive there.
Hopefully they'll keep giving with the deduction changes now. I mean, I'm a millennial and I donate to a lot of charities, but that certainly impacts it.
You don't donate because there's a tax.
No, I don't. No, I don't. But I'm just saying there's implications.
Don't you love how all roads lead to tax?
Yeah,
tax bill for us.
Today.
Aron, thank you so much for joining us. Really good stuff.
Good to see you.
Come back soon. Aron Levine joining us there.